Welcome to the deep dive. Today we're diving into the world of Indian footwear retail with Metro Brands Ltd. And you sent over their recent investor presentation and some stock exchange filings.
Yeah, it's really interesting to see not just the numbers, but also like how they're thinking strategically, how
Mhm.
they're tackling challenges in the industry, and where they see themselves in the future.
Yeah. So first things first, Metro Brands has been around for a while. We're talking about a 65-year legacy, starting with one store back in 1955.
And now, fast forward to the end of December 2024, they have a network of 895 stores across India. That's a presence in 203 cities and 31 states. Pretty impressive reach, right?
Definitely. But it's not just about the number of stores. What's their market share like? How do they compare to other major players in the Indian footwear market?
That's a great question. Looking at the data, they're definitely a significant player, though perhaps not the absolute top dog. But their growth strategy is intriguing. They're not just focusing on major metropolitan areas, they're strategically expanding into Tier 2 and Tier 3 cities, tapping into those emerging markets.
Okay, that makes sense. Let's talk about their recent performance. Their Q3 and 9-month results for fiscal year 2025 tell quite a story. Remember how many retailers struggled earlier in the year?
Yes, the first half of the fiscal year was tough for many, but it looks like Metro Brands had a strong rebound in Q3. They pulled in a revenue of Rs 688 crore, which translates to double-digit growth. Their EBITDA margin also hit a healthy 32.6%.
That's a solid comeback. But what drove that growth? Was it purely the festive and wedding season? Or did something else contribute?
Well, the festive season definitely played a role, but I think we should also look at their strategic partnerships. They've been making some interesting moves, and those might be starting to bear fruit. For example, they just announced a major partnership with New Era, the global headwear brand. Oh, you're right. I almost forgot about that. So they're expanding beyond footwear now.
Exactly. They'll have exclusive distribution rights for New Era products in India. We're talking hats, apparel, the whole works.
This seems like a smart diversification strategy, doesn't it? Moving beyond just shoes could open up new markets and customer segments for them.
Absolutely. It also helps them mitigate risk. Instead of putting all their eggs in the footwear basket, they're branching out and tapping into new growth areas.
Speaking of challenges, the Indian footwear industry had a bit of a shakeup in 2024. With the implementation of the Bureau of Indian Standards quality control orders, what impact did that have on Metro Brands?
Ah, yes, the BIS implementation. It definitely created some ripples in the supply chain, particularly for the sports and athleisure categories. And Metro Brands hasn't been immune to this.
So how are they navigating this challenge?
They're taking a cautious approach. They're not abandoning the sports and athleisure segment, but they're being careful about expansion in that area while they figure out long-term solutions. Okay, that sounds prudent. They're acknowledging the challenges,
Right.
but not letting them completely derail their plans. Speaking of plans, remember that partnership with Foot Locker we mentioned?
Yes, the first Foot Locker store in India opened its doors in October 2024 in New Delhi. It's still early days, but this is a major development.
Definitely something to watch.
Uh-huh.
Are they planning a rapid rollout of Foot Locker stores? Or are they testing the waters first?
It seems they're opting for a measured approach, which makes sense. They're gauging consumer response, understanding the market dynamics, and then they'll likely make decisions about further expansion.
Makes sense. And let's not forget about Fila. Metro Brands has the exclusive license for Fila in India, and they've been busy restructuring that part of the business.
They've cleared out excess inventory and are cleverly using their existing Metro and Mochi store networks to relaunch the brand. Plus, they've started local manufacturing of Fila footwear, which could be a game changer in light of those BIS challenges we talked about.
So they're killing two birds with one stone, revitalizing the Fila brand and addressing those supply chain hurdles. It seems like having a diverse brand portfolio is one of Metro Brands' core strengths, wouldn't you say?
Absolutely. They cater to a wide range of consumers, from budget-conscious shoppers to those seeking premium brands like Clarks and Skechers. And their own brands like Metro Mochi and Walkway are a significant part of their success. In fact, those brands contribute a whopping 74% of their revenue.
That's remarkable. Building strong in-house brands gives them more control over their operations and destiny, doesn't it?
Precisely. It allows them to respond to market trends quickly, manage costs effectively, and create a unique brand identity that resonates with Indian consumers.
But selling shoes is just one part of the equation. How are they building customer loyalty?
Their loyalty programs, Club Metro and My Mochi, have gone digital, which is a smart move. This allows them to gather valuable insights into customer preferences. personalize offers and improve the overall customer experience.
And how are those programs performing? Are they actually driving repeat business?
They seem to be quite successful. Repeat sales to loyalty program members exceed 50%, which indicates that they're doing something right.
Those are impressive numbers, so they're not just acquiring new customers, they're also keeping them coming back for more. Now let's talk about something a bit different, sustainability. Is this something Metro Brands is actively engaging in?
You might be surprised to hear this, but they are actually taking a leadership role in sustainability. Their Recycle a Pair for Every Pair We Sell initiative is pretty impressive. They've already processed millions of pairs of old footwear in just the first 9 months of FY25.
Wow, that's a lot of shoes.
Yeah.
What's the environmental impact of this initiative, and how are consumers responding to it?
It's a great question. It's definitely a positive step towards reducing waste in the footwear industry, and it seems to be resonating with consumers. They're increasingly conscious of environmental issues, and initiatives like this can definitely influence their purchasing decisions.
Yeah, it sounds like Metro Brands is not just paying lip service to sustainability, they're actually taking concrete action.
Yeah.
Now, there have been some changes at the top right. 2 long-serving independent directors are stepping down in February 2025.
Yes, Mr. Manoj Kumar Maheshwari and Ms. Aruna Advani are leaving the board after many years of service.
Yeah, their departure marks the end of an era. But there are also some new faces joining the board, right?
Absolutely.
Mrs. Radhika Pirnal, a prominent business leader and LGBTQ rights advocate, and Mr. Bhaskar Bhatt, a veteran of the Tata Group, are joining the board as independent directors.
Those are some impressive additions. It's great to see them bring in fresh perspectives and expertise to the board. But what about the CEO, Nissan Joseph?
His name has been popping up in those filings he sent.
Yeah.
And there's some news. He's just been officially designated as one of the company's senior management personnel.
That solidifies his leadership role even further. What's his background, and what kind of impact has he had on Metro Brands so far? Mr. Joseph has a wealth of experience in brand management, both in India and internationally. He seems to be the driving force behind many of Metro Brands' recent successes. The New Era partnership, the Foot Locker, launched the restructuring of Fila. He's been at the helm of all of these initiatives.
He definitely seems to have a knack for making bold moves and pushing the company forward. So we've covered quite a bit in this first part of our deep dive.
Yeah, we've looked at their history, their market positioning, their recent performance, their brand portfolio, their customer loyalty efforts, their sustainability initiatives, and even their leadership changes.
But there's still more to explore.
In the next part of our deep dive, we'll delve deeper into their financials, their expansion plans, and their digital strategy. Stay tuned.
Welcome back to the deep dive. We're continuing our exploration of Metro Brands Ltd. In the first part, we covered a lot of ground, from their history and market presence to their brand portfolio and sustainability efforts. Now let's shift our focus to their financials. You've shared their investor presentation and stock exchange filings with us, so let's see what those reveal.
Looking at their revenue and gross margins over the past few years, you'll see a pretty consistent picture. That kind of stability is reassuring, especially in a market that can be quite volatile.
Yeah, stability is definitely a good sign. It suggests they have a solid foundation and aren't experiencing wild swings in their performance. But what about profitability? Are they effectively managing their costs and generating healthy profits?
Well, their EBITDA margins have been steadily climbing, which is another positive sign. It suggests they're becoming more efficient and profitable as they scale.
Okay, that's encouraging. What about their debt levels? Are they taking on a lot of debt to fuel their growth?
They seem to have a relatively low debt-to-equity ratio, which is a good indicator of their financial health. It means they're not over-leveraged and are in a strong position to weather economic storms.
So from a financial perspective, they're looking pretty solid.
Indeed. Their strong performance in Q3, their strategic partnerships, their commitment to sustainability, their focus on digital innovation, and their solid financials paint a picture of a company that's well-positioned for future growth.
But it's not all sunshine and rainbows. The BIS implementation is a real challenge for the entire industry. Do you think Metro Brands is adequately addressing this?
It's something they'll need to continue to address strategically. Their cautious approach to expansion in the sports and athleisure segment is understandable, but they'll need to find solutions to navigate those supply chain disruptions if they want to capitalize on the growth potential of that market.
Right, so it's a hurdle but not a roadblock.
Precisely. It's a challenge that presents both risks and opportunities. How they navigate this will be a key factor in their continued success.
Now let's talk about their leadership. Those board-level changes are quite significant. The departure of two long-serving independent directors is a big deal.
Yes, the departure of Mr. Manoj Kumar Maheshwari and Mrs. Aruna Advani is certainly noteworthy. But remember, the addition of Mrs. Piramal and Mr. Pat brings fresh perspectives and expertise to the table. They both have impressive track records.
And Mrs. Piramal's advocacy for LGBTQ rights is also interesting, considering the changing social landscape in India.
Yeah, it speaks to Metro Brands' awareness of evolving social values and their commitment to diversity and inclusion. These are increasingly important considerations for businesses today. It also potentially positions them well with younger, more socially conscious consumers.
And the elevation of Nissan Joseph to senior management personnel further solidifies his leadership role. He seems to be making quite an impact.
Mr. Joseph seems to be a driving force behind the company's recent successes. The New Era partnership, the Foot Locker launch, the restructuring of Fila. These all bear his fingerprints.
Yeah.
He's not shying away from making big decisions.
Right. He's clearly not afraid to make bold moves. And so far, those moves seem to be paying off.
Indeed. His experience in international markets and his vision for growth are valuable assets for Metro Brands. It'll be fascinating to see what he does next.
So we've covered a lot of ground here. Their financials, leadership changes, and the ongoing challenge of the BIS implementation. But looking ahead, what does Metro Brands' future look like? Where are they headed?
Their investor presentation provides some insights into their expansion plans. One thing that jumps out is their ambitious store expansion plan. They're aiming for 225 new stores, excluding Fila, across fiscal years 2025 and 2026.
Whoa, that's a significant ramp up. Even for a company with Metro Brands' track record of growth, what's driving this ambitious expansion?
It signals their confidence in the Indian market and their determination to capture a larger share of the footwear retail pie. They're not content with their current market position. They want to grow aggressively.
But it's not just about adding more stores. It's about strategically positioning them. In the first part of our deep dive, we talked about their expansion into Tier 2 and Tier 3 cities. Is that trend continuing?
Absolutely. They're recognizing the untapped potential in those markets. The rising disposable incomes, the growing aspirations of consumers, and the increasing demand for quality footwear. It's a smart move to get in early and establish a strong presence in these emerging markets.
And this expansion isn't limited to physical stores. They're also investing heavily in their digital platforms, right?
Yeah, you're absolutely right. Their e-commerce business has been growing steadily, and they're clearly leveraging their online presence to reach a wider audience, build brand awareness, and drive sales. This omni-channel approach is becoming increasingly important in the retail world.
They're also using their digital channels to gather valuable data on customer preferences, which can inform their product development and marketing strategies. That data can be a goldmine for them.
That data-driven approach is essential in today's retail environment. It allows them to personalize the customer experience, offer targeted promotions, and anticipate future trends. It's about understanding their customers deeply and catering to their specific needs and preferences.
Yeah, it's like having a crystal ball for shoe lovers. But seriously, this multi-channel strategy, combining physical stores with a robust online presence, seems to be a winning formula for Metro Brands.
It allows them to cater to a wider range of consumers, those who prefer the in-store experience and those who prefer the convenience of online shopping. It also creates multiple touchpoints, increasing brand visibility and engagement. It's about meeting customers wherever they are.
So they're meeting customers where they are, whether that's browsing online or trying on shoes in a store, and their loyalty programs play a crucial role in this strategy. Those digitalized programs not only reward loyal customers, they also provide valuable data that can be used to personalize offers and enhance the customer experience.
It's all about building relationships, not just transactions. They want to create a community of loyal customers who feel valued and appreciated, and that can translate into long-term success.
So it sounds like Metro Brands is firing on all cylinders. They have a strong financial foundation, a capable leadership team, ambitious expansion plans, and a commitment to innovation and sustainability. But what are the potential roadblocks they might encounter?
Well, while they seem to be in a good position, there are always challenges in the business world. Competition in the Indian footwear market is intense, with both domestic and international players vying for market share. They'll need to constantly innovate and differentiate themselves to stay ahead of the curve.
Yeah, that's true. And consumer preferences are constantly evolving. What's popular today might be out of fashion tomorrow. Metro Brands will need to stay on top of trends and adapt their offerings accordingly.
And let's not forget the ever-changing regulatory landscape. The BIS implementation is just one example of how regulations can impact the industry. Metro Brands will need to be agile and responsive to navigate these changes effectively.
So there are definitely challenges ahead, but they seem to have the experience, the strategy, and the determination to overcome them.
Indeed. They've demonstrated their ability to adapt and evolve over their long history, and that bodes well for their future.
We've covered a lot in this second part of our deep dive. We've examined their financials, their leadership changes, their expansion plans, their digital strategy, and some of the challenges they might face.
We've seen how they're building a strong foundation for future growth, while also acknowledging the potential hurdles they might encounter.
But there's still more to explore. In the final part of our deep dive, we'll take a closer look at Metro Brands' long-term vision and what the future holds for this dynamic company. Stay tuned. Welcome back to the deep dive. We're wrapping up our exploration of Metro Brands Ltd. We've looked at their financials, their leadership, their impressive growth strategies, and even their commitment to sustainability. But now let's step back and consider the bigger picture. What's their long-term vision? And what does the future hold for Metro Brands?
If we connect all the dots we've gathered so far, it seems Metro Brands is aiming to be much more than just a footwear retailer. They're building a brand that represents style, quality, and value. They're creating a retail experience that seamlessly blends the physical and digital worlds. And they're doing all of this while staying true to their values of sustainability and social responsibility.
Yeah, it sounds like they're playing the long game. They're not just chasing short-term profits. They're building a brand that can stand the test of time. But what are the specific steps they're taking to achieve this vision?
Well, their investor presentation outlines some key areas of focus. First, they're continuing to invest in their core brands, Metro, Mochi, and Walkway. They're constantly innovating, introducing new styles, and improving the quality of their products. They understand that building strong in-house brands gives them a competitive edge.
And as we've discussed, they're also strategically expanding their store network, both in major cities and in emerging markets.
Yeah.
They're not just adding stores haphazardly, they're carefully selecting locations and formats to maximize their reach and impact.
Exactly. They're also investing heavily in their digital capabilities. They're enhancing their e-commerce platform, personalizing the online shopping experience, and leveraging data to better understand their customers. They recognize that the future of retail is omnichannel, and they're preparing for it.
And it's not just about selling shoes, is it? They're building a community around their brands through their loyalty programs, social media engagement, and even their sustainability initiatives.
You're right. They understand that in today's market. It's not enough to simply offer good products. You need to create an emotional connection with your customers, make them feel like they're part of something bigger, and Metro Brands is doing a good job of that.
So it seems like they have a clear vision, a solid strategy, and a strong track record of execution. But as we've discussed, there are always challenges in the business world. What are some of the potential roadblocks they might encounter on their journey to success?
One of the biggest challenges they'll face is competition. The Indian footwear market is crowded, with both domestic and international players vying for market share. Metro Brands will need to constantly innovate, differentiate themselves, and offer a compelling value proposition to stay ahead of the curve.
Okay, that's a good point. And as we discussed earlier, the regulatory landscape can be unpredictable. Changes in government policies, import-export regulations, and quality standards can all have a significant impact on the industry. Metro Brands will need to be agile and adaptable to navigate these changes effectively.
And let's not forget about the broader economic environment. Inflation, currency fluctuations, and changes in consumer spending patterns can all affect their business. They'll need to carefully monitor these macroeconomic trends and adjust their strategies accordingly.
So it's not going to be a walk in the park, but they seem well equipped to handle the challenges that come their way.
Indeed. They have a strong leadership team, a proven business model, and a deep understanding of the Indian market. And they're not afraid to take risks and embrace new opportunities.
So as we conclude this deep dive, what's the one key takeaway you'd leave our listeners with?
Metro Brands is a company on the move. They're not just selling shoes. They're building a brand that resonates with Indian consumers. They're embracing innovation, expanding their reach, and creating a retail experience that seamlessly blends the physical and digital worlds. They're a company to watch, and I'm excited to see what they do next.
It's been a fascinating journey exploring the world of Metro Brands. We've learned about their history, their strategies, their challenges, and their vision for the future. And I think our listeners are walking away with a much deeper understanding. of this dynamic company and the Indian footwear industry as a whole.
Yeah, it's been a pleasure joining you on this deep dive. Always exciting to delve into the complexities of a successful business.
Thanks for joining us. Until next time, keep exploring, keep learning, and keep those shoes shined.